This isn't a sale. This isn't a pitch. This is really educating folks on what they need to do to keep their business in good standing, to keep their liability in order, to prep their business for financing or a funding round or an acquisition, depending on what it is. You need to have an entity that's active in the state. Otherwise, you're not going to be able to take out a loan, or you're not going to be able to get acquired.
Hey, everyone. Thanks for tuning into this week's Tax Rep Network podcast. I'm Eric Green. We have brought Frank Tumminello back from FileForms. It's that time of year, Frank. I mean, right? So if you guys are not familiar with FileForms, and the reason I mention that, if you're new to the channel or haven't listened in, so Frank has got, I think, a really interesting background in private equity and venture capital, and that whole world. Teamed up with somebody else, Kenny Detman, who's also been on webinars and stuff with us, and developed FileForms. And what this will do is take care of all of the corporate filing. I say corporate corporations, LLCs, all those state compliance filings. And what's interesting is most CPAs and EAs, lawyers do that. All right, they think the client will go do it. And it up inevitably. FileForms partners with tax pros from everything from an easy dashboard that you can help your client do this to actually offloading it, and FileForms will do it for the client and you can get paid. It's a great partnership program. There's no cost of being associated with it. And by the way, in my world, my estate planning, I spoke to Kristen, my estate planning partner. What we find is people that show up for do their estate planning, we've just learned, oh, you have a real estate LLC. We want a title search. And they're always like, there's no mortgage. What are you talking about? We do a title search, and guess what? The LLC doesn't own the property. Because again, some attorney set up an LLC and figured the client would deal with it themselves. No one ever finishes, moves the real estate to it. With us, on the rep side, people come in, we do the same thing. We'll go out and check, and their corp is in default. Their LLC has been basically voided by the state for not filing the annual report and all of that stuff. This is a way for you to be a hero for your client, make money doing it, and make sure that all this stuff is taken care of. And again, for the audience, we've had Dawn Brolin on talking about her relationship pricing. It's a subscription pricing model. She's killing it in terms of making money. But here's the thing. That kind of the pitch to clients to pay that is, we're going to take care of you. It's a whole kind of bear hug approach. This is part of that. All right. This is one of those easy add-ons. And frankly, you don't have to do anything. FileForms will do it. So anyway, Frank, it is that time of year. We're approaching year end. We're in fourth quarter. Thanks for coming back.
My pleasure. Yeah. Great to be presenting again with you, Eric, and co-hosting this podcast. And it was an exciting kind of start to the year. Q1, Q2 was certainly a busy time of the year for us, and obviously we don't want to bother accountants when they're doing their core competencies, tax filings and extension filings. But really now in Q4 is a terrific time to really kind of get the infrastructure in place for advisory services such as compliance for your clients. More and more, we speak with CPAs, accountants, other folks, either new to building a practice or folks that potentially might be planning to retire not too long. And we've found that the advisory services that folks are providing to clients more and more are kind of the recurring, the subscription-based services that their clients really seek in kind of getting that advisory from the CPAs. So we've really leaned into that. Corporate filings, it's not the sexiest topic in the world. It's kind of an interesting segment where a lot of times, as you said, folks will think their attorney's handling it. A lot of times the CPA may or may not be handling or being asked to handle it, or sometimes it just falls to the business owner and slips through the cracks. So to give CPAs and trusted advisors the ability to really lean in, provide these value add services, which are really foundational and fundamental to running a legitimate business that will have that exit one day. It's a no-brainer opportunity. And I was on a call not too long ago when a CPA mentioned to me corporate housekeeping, which I thought was a really nice way of describing what's needed for clients. And that encompasses all the different corporate filings we do. If folks aren't familiar with what we mean by corporate filings, it's not tax filings. It's not filings with the IRS. It's really filings with the Secretary of State, annual reports, registered agent services, company formations, foreign qualifications, EINs. We also do that, obviously, as with the IRS. But once again, these are filings that are very difficult to track, given the nature of deadlines varying state to state.
Yep.
And also fees to file these forms are extremely variant state to state as well, which ends up creating a very large administrative burden, not just on the filing side, but then also on the invoicing side, which when we started our business wasn't something we really appreciated, how challenging it is to invoice and collect for these state filing fees. So in the last few months specifically, we've really listened to our clients, taken that feedback in, and we've built some pretty tremendous new features that I'm excited to get into today. But generally speaking, Eric, I'm sure you can appreciate this with all the different CPAs you serve. We felt that, in the last year or two, the amount of private equity money flowing into accounting practices has been remarkable. And more, they're going to come down market and look to acquire baby boomers businesses that are retiring and, seeking that succession planning. So we really believe that FileForms, the services we provide, the reseller model and referral model we provide to CPAs, the outsourcing approach for providing the services through our team to your clients, is really going to bolster that revenue. It's going to bolster that profitability, and it's really going to help drive recurring revenue, which ultimately trades to that private equity acquirer for a much richer multiple down the road when timing's right. So I'm sure you've experienced some of those trends, Eric, with all the folks you work with.
Well, listen, we just did a podcast with Michelle Seiler Tucker, who wrote the best-selling book, Exit Rich. And what she points out, which is true, you have an accounting practice, and your practice is you sit and do returns. You have nothing to sell but a job. And so you're going to probably get like a 0.8 times EBITDA. She said, but if I showed up and you have multiple sources of income, right? Like from FileForms, from the corporate filings, from returns, from advisory, and you've automated much of this, or have it outsourced it, or have a very solid C-suite type team, she said you could get a 1.3 times gross revenue. And so let's take $1 million practice. The $1 million practice, let's say EBITDA is 400,000. I just want to put numbers to it. All right. Or let's say 500,000. Let's make the math easy. If you're sitting there doing everything yourself, maybe with one staff, yeah, maybe they'll give you 400, 8 times that over 3 years if the clients stay. So maybe you can sell for 400 grand. Okay.
4 million.
No, 400,000. And we're talking tax practices here, not a, but to your point, now let's say you show up and everything's automated. They can run this from a laptop in Miami or in Detroit or wherever, and they've got all the different sources of revenue. So in other words, a buyer can step into that business and take it over, right? And can then work on the market. You know how, you were private equity, you know how this works. Can we put some digital ad spend here, get the right C-suite team and take this from 1 million to 1.5, 1.8, whatever? That, she said, you could get 1.3 times revenue. So you're looking at 1.3 million versus 400,000. Why? Because you've automated and you have multiple sources of revenue that now a buyer is buying a business, not a job. And that's the difference. So we've been banging this drum now for over a year to automate, get your life back. But a lot of it is maximizing value, maximizing the bottom line. This is easy revenue that, frankly, is a service your clients need. Because I'm willing to bet 50% of them aren't doing it. So, Frank, it is fourth quarter. You and I just did a program. If for folks who missed it, you can actually go and I think still watch it because Pennsylvania, big state, obviously a big state, but it's a sizable state, tons of businesses. That deadline was September 30th. I've gotten a couple comments from people on that saying, well, if my client didn't do it, is it too late? You can always go and late file. In fact, I think that would be the recommendation, right? If you have clients in Pennsylvania and they didn't file, go get, I mean, there might be I don't know what they have for a penalty fee on top of it, but go get that filed because nobody wants to get sued and find out their LLC doesn't exist anymore.
Seriously. Fortunately for the Pennsylvania LLC owners who may have missed their annual report, they actually have a 6-month grace period because
Oh, that's
until
nice.
until this year, actually, Pennsylvania was very unique where the LLCs only had to file every 10 years. So, unlike most states where it's an annual report every single year, Pennsylvania used to never be like that. Then the law changed. Now it's somewhat of a rude awakening for folks that might have done business in Pennsylvania for decades on end, because now this is an annual report as it is in most other states. But because of that law change, thankfully the great state of Pennsylvania is offering some forgiveness, a 6-month grace period. But to your point, Eric, it's a great opportunity to serve clients. Most of the clients probably aren't aware of the law change, and a lot of folks aren't following this as closely as folks like us. But fortunately, there won't be any penalties if you are able to get it done in a timely manner. If you don't get it done in a timely manner, as you said, the entity could be dissoluted, which obviously does create some liability, some exposure for the client. A lot of folks are setting up LLCs strategically to mitigate those risks, but if the LLC is inactive, you're not going to get that benefit. As we mentioned, kind of Q4, great time is to kind of create educational awareness around these filings for clients. You said it best. These are things your clients need to do. So this isn't a sale. This isn't a pitch. This is really educating folks on what they need to do to keep their business in good standing, to keep their liability in order, to prep their business for financing or a funding round or an acquisition, depending on what it is. You need to have an entity that's active in the state. Otherwise, you're not going to be able to take out a loan, or you're not going to be able to get acquired. So it's truly fundamental. And a lot of your clients are sleeping on this. They probably, like we said, somewhere between their attorney, their CFO, and the tax prep provider. So it's a great opportunity to lean in. And as we kind of think about other states that have upcoming deadlines, as we mentioned, most deadlines are kind of that Q1, Q2 time period. So those will be the 2026 reports that we can prepare for and speak to more. But Minnesota
Are they one of the states that actually has a calendar deadline?
Yes. And it's December 31st for the LLCs. So, a lot of folks in Minnesota may have already filed because they've had the whole year to do it. We're very fortunate with our technology. We can actually see who's already filed and who hasn't. If you are interested in learning more and kind of working with FileForms, part of our onboarding process is actually enrolling your clients into our proactive monitoring services, which connects to the state portal. And we'll be able to preemptively see who's filed and who hasn't. And we're only going to send the notifications for filings to those who haven't filed yet. So it's a great opportunity, once again, to provide an additional layer of security and value add benefit to clients who might have missed the filing or haven't anticipated filing because they're busy running their business, not focused on corporate housekeeping.
Yeah, right. Well, and a couple of things. So the reason everyone who's listening, why I bring up that it's a calendar year end, many states, it's a year from whenever you filed. So it's kind of a rolling,
Yep.
I've set up, my God, I have no idea how many entities. Everyone can have a single, in Connecticut, can have a single different annual filing because it's based on when you actually set it up. But to that point, what I really love about FileForms, I get updates. But if I log into my dashboard, everything is there.
Correct.
And that to me, again, it's, and we have staff. I mean, we could track and we mark. In fact, they wanted me to ask you about North Dakota for some weird reason. But anyway, we'll get to that in a moment, before I forget. But Mark and Jay, like they have a whole Google sheet, and everyone's invited on the Outlook thing because we don't want to blow these deadlines. This has been a game changer for us to just go in and just our paralegal can go in on a weekly basis, everything that's coming up, everything that needs to be done, and it's done, and nothing gets missed. And we alert the client, hey, we took care of this, don't have to worry about it. Client is like, thanks, right? I mean, they go on about their day, but you know what if it ever comes up, they're like, oh yeah, I know. Lynn and Jay and Mark, they just take care of it for me, green and scars. It's just done, right? And so it is kind of, I think that's great. It's corporate housekeeping is a really good way to describe it.
Yeah.
So anyway, before I forget, they wanted me to bring up North Dakota, and I'm trying to remember. There's something about there's a November deadline.
November 15th, which we're recording today. It's November 11th.
By the time this hits, it's going to be after November 15th.
Exactly. So
but if you have somebody in North Dakota, you better make sure they filed by November 15th, or you're going to have to go get them filed to get them up, keep them up to date.
And quite frankly, North Dakota is not the biggest state, but I can certainly appreciate how folks in North Dakota are probably not focused on a November 15th deadline. Once again, it's kind of one of those wonky states where it's late in the year.
Here's the thing, though. North Dakota and South Dakota are big filing states for dynasty trusts. LLC, I'm willing to bet that, and again, I don't know how many accountants really, again, take a wholehearted approach to their clients' well-being, their estate planning. But I think that's why they asked. We have a lot of folks that ran to North Dakota and South Dakota back when we were at 90 years, because that's not enough. And so our Fairfield, Greenwich, Westport folks who want to leave $100 million in effectively a dynasty trust, they all went there. South Dakota, I think, has no limit. Trust can last forever. I don't remember what North Dakota's is, but they were way better than Connecticut. And so people moved their capital there. All of the major branches had companies they set up there. So I'm just throwing out there. I'm wondering how many folks, if you went and surveyed your clients, you might run into a few wealthy people and say, you know what, I do have stuff in North Dakota. Why? Those LLCs, in a lot of family limited partnerships, family LLCs, those things will have November 15th deadlines.
And those are the clients that ultimately are going to have maybe not just a dynasty trust in North Dakota, but prevalent real estate portfolios. If they're managing that real estate in a very proactive way, each individual asset will be kept in a different LLC. Right. Those folks probably also have operating businesses. How else do you get to that kind of $100 million mark without having an operating business? I guess you can always inherit it if you're fortunate, but nonetheless, we've really seen tremendous outcomes within our family office clients. A lot of them do, have those extensive real estate portfolios. They have extensive franchise portfolios. Once again, very much a real estate play. Some even own professional sports teams, believe it or not. And being able to really have a single dashboard to manage entities across all 50 states, being able to aggregate all those registered agent notices that you might receive. If you're a doctor's office, for example, you're receiving potentially slip and fall claims and different liens against your business. God forbid. It's not usually the notices you want to be receiving, but to have those important notices all in one place, stored for reference. You can invite your attorney to your portal. You can invite your CPA to your portal. You can invite your CFO to the portal, and everyone will have that transparent view of, is this business in good standing? When's the next filing obligation? Are we receiving important notices from the government or different municipalities? That's really the transparency we can provide. Once again, it's no additional cost to you as the practitioner. It's only upside. We have a ton of folks who onboard with our team. We upload their clients. Their clients are put on the reminder sequences, only get reminders when they haven't filed yet. And then really the CPA is just sitting back and collecting a check because we're handling the payments. As I mentioned, we're handling all the state filing fees. You're not having to front the state filing fee of, Delaware, the franchise tax fees, $300. If you have one of those high net worth clients with 100 Delaware entities, you're not going to want to shell out 30 grand and then have to go chase that guy down for 6 months, or that guy or girl down for 6 months in order to recoup your cash. In fact, we put that process on its head, where we actually are collecting directly from the client through our technology and then remitting the revenue share or the wholesale retail spread back to you as the practitioner, so that you're never out. So your cash flow cycle, once again, as you think about succession planning, as you think about that exit down the road, your cash flow cycle is going to be tremendous. It's going to drop right to your bottom line while providing that value out to your clients and saving a ton of time, because these state portals are not exactly modern technology by any means. No, none of them are connected. So each state, a lot of CPAs very comfortable forming LLCs in their home state. Then they have to take one state to the right or to the left or the north or the south, and they're not comfortable forming. So once again, you don't want to have to send that client to another provider and potentially never get them back. We've seen that quite a bit, where folks refer to other corporate filing providers, and then next thing you know, they're working with another bookkeeper, they're working with another CPA in that state, and providing that native experience across all 50 states in your firm is what is really kind of the success stories we've been able to drive. And folks are definitely reaping the benefits of it from a profitability standpoint.
I like getting the monthly notice that the money's going to be deposited in my bank.
Yeah, it's not too bad. And that's the other thing we found, which we never anticipated, was that a lot of the legacy providers, one, they don't have the ability to white label, so they can't put that branding of your firm on the filing experience, for lack of a better term. You're forced to send some random brand that maybe your client's never heard of, and they might think it's spammy, they might think it's not meant for them. But when you're marketing value add services like this under your own brand, it's only going to establish more trust between you. It's going to build that client relationship even more. And, it really does make a huge difference. And then once again, we do pay our commissions. We do pay our revenue shares. We do pay out every 30 days.
I'm a testimonial for you. I get paid.
Exactly.
Yeah, no. And any other deadlines that you can think of that are important to mention?
I would say Michigan is very important. The filing window just opened for Michigan, so folks can go ahead and start filing their 2026 filings. The LLC deadline in Michigan is February 15th. So not a huge amount of time post New Year's to kind of get that completed. So we highly recommend, if you have Michigan clients right now, go ahead and get them filed. Get a feel for what the FileForms experience is. Once again, no upfront cost to get started, only upside. But post New Year, that's really where you're going to see, the big states like Florida and the Delaware LLCs for franchise tax, a whole host of others, Georgia, for example. That's where you're going to start to see, the really chunky opportunities flow through. We're ready to serve. We've launched no shortage of new features this year. We launched 6 new products this year and a whole bunch of other features to accompany them, in addition to integrated payments and expedited filing. So now we can turn around Delaware LLCs in 24 hours. Not only do that for you, but do that for your clients. So these are kind of good examples of the feedback we've taken in from the thousands of CPAs that we're fortunate to work with. And, we are a nimble team. We build technology, we listen to our clients, and we like to say we give our partners a bear hug, because every time we have someone sign up, they're the recipient not only of our technology and our team support and tremendous customer service, but also marketing collateral, email templates, letters to your clients.
Which, by the way, are excellent. If you haven't gone and checked out FileForms, first of all, there's a ton of free information, which is very educational. But yeah, the assets you can provide your partners is really impressive.
And we've been great partners between tax rep and FileForms now for it's almost been 3 years, Eric, believe it or not, and we've known each
Since
other
you
a lot
launched.
longer than that.
when,
But
when you messaged me that you were launching FileForms, and I was like IRS forms, like what is that? And yeah, no, my partners, of course, were like, I don't know about this, and they've embraced it too. I mean,
yep, it's been
it's
tremendous. All the speaking events have been great, the education, and even the cross pollination with folks like the CFO project and RC reports. We're seeing great outcomes there. So it really does feel like we're leaning into the right trends that are going to help build your practice to be as valuable as it should be, without doing anything more than serving clients.
no, the what's funny is, so I don't know if I've ever told this story. A number of years ago, one of my clients, a longtime client, he lives in Greenwich. I'll just say that. Calls me up. It makes a lot of money. It does. It's very successful. Calls me up and he said, "I need a Texas LLC tomorrow." I'm like, "Why? Your business is in New York. What, like, are you expanding? And why tomorrow?" He said, I don't know if you remember this, when Ferrari came out with the last true, I think it was an aspirated engine. It's what people call really true turbo. It was the last one they were building. They're getting out of it. And I said, "There's a Ferrari dealership. For those of you who don't know this, why you wouldn't, I don't know. There's a Ferrari dealership right by the train station in Greenwich. Go over there and get one." He said, "They're gone. Every dealer got two. They're gone. The guy in Texas, I think in Houston, has one, but he can only sell it within his geographic area. I need a Texas LLC by tomorrow." And it was a nightmare for us to figure out what to do, file it, get it expedited, call the secretary. I mean, we got it done. Got the car, and I mean, well, he ended up paying, put the money down so the guy wouldn't sell the car to anybody else. And it was the following day he had to bring proof of the Texas LLC, and they sold the car. Meanwhile, he bought it for 450,000. He just sold it for 2.1 million. Anyway, it doesn't matter. The point being, it was a good investment.
Yeah.
But today, I know, because yesterday I went and looked. I could set that up with you guys, like nothing, because you have people
Turnaround
that
time.
do nothing but that, right? So
Exactly.
just sit there. I mean, I remember I charged them like $4,500, half of which was my figuring out what to do in the state of Texas. So it really is. There are those kinds of things that come up, but just the routine stuff, making sure all your clients are taken care of. And by the way, I'm going to make a business case now for the CPAs and EAs. Not only do you get the revenue stream, you're taking care of the client. This is a great marketing thing. We take care of our clients, tax filings, corporate filing. We will get an estate planner, bring them in for your financial planning. We take care of our clients, and that's why we're going to charge a premium rate, by the way. All right. So it does a number of things. It creates a stickier relationship. Most clients don't want to leave when you're kind of doing everything for them, right? Because that is a huge pain in the neck to up and go. You are going to charge more, I hope, because you are a trusted advisor, not just the guy that does the returns, not just the woman I see once a year in April, right? You are now their advisor. This is getting into Dawn's relationship pricing, which is effectively, just monthly subscription pricing, but it's packaged as we're in a relationship together, for better or worse, and she charges accordingly. And you will boost the value of your practice.
Without a doubt. Honestly, after being in this business for 3 years and building the partnership model that we have, and like I said, giving back to partners every chance we get, we've actually seen partners reap enough benefit from FileForms where they could probably go buy that Ferrari themselves, because that's kind of the opportunity that does exist in this filing world that we bring to life, without any overhead for you, without anything more than really just uploading a few entities and letting the software do the work. So not sure how many car aficionados are on, if it's Ferraris or Lamborghinis or what makes people tick these days, but nonetheless, if you are trying to kind of build more growth to your practice, more profitability, this is a no-brainer. For sure. And, everything from the expedited filings to the automated workflows, the reminders, the monitoring, the bulk upload capability, full 50 state coverage. And you're going to give your employees back time. I think that's one of the hardest things to quantify. I usually like to say that these filings are going to take, per client, probably 30 to 60 minutes per state per entity. We work with folks that have thousands of entities. So if you do the math on that, that's several weeks, if not months of work that you're giving back to your staff to probably do higher billable hour work. So not only are you making money, saving time, but then you get to go monetize that time that you saved in a different place that's probably more exciting for your employees, probably more exciting for you. So we've seen 90% of manual tasks go away while costs come down, profitability goes up. I mean,
No,
what else should you be doing with your time?
Look, guys, it's a no-brainer. So listen, I'm going to put a link below. You can sign up for the partnership program with FileForms. It's free. All right. Take a demo. I think you'll be very impressed with just everything, all of the just the ease of use and understanding and tracking of everything is, for me, a lifesaver. We're going to be doing a webinar on this, by the way, in December. I'll put a link to that as well. So please join us for that. We'll be diving more into this. But frankly, I think go take the demo. Again, sign up for the partnership. It costs you nothing. And really give some thought to how you're going to leverage this. Again, trusted advisor, new revenue stream, but also it makes you and your practice more valuable to both clients and a potential private equity person like Frank used to be, right? So listen.
One last point on that concept is about a couple weeks ago, I was talking to a CPA who recently sold a sizable practice to a private equity firm. And I asked the gentleman, I said, hey, like, how was the deal structured? And he was like, oh, it was a mix of cash, equity, and an earnout. A lot of people don't know what an earnout is, but essentially an earnout's a bogey where if your practice continues to grow, where you retain the clients after the transaction, you'll get an incremental payment, purchase price, in addition to what you received up front, in addition to that equity that you might have rolled into the parent company. This is a tremendous way for you to hit your earnout. It's an incremental benefit to your practice. It will make your practice more profitable. It will make your practice have more revenue. And furthermore, you could then take that to the parent acquirer and probably serve all their clients as well. So earnouts are something that are going to be talked about more and more as this private equity trend continues in the accounting world. This will help you hit your earnout 100%. And we're seeing that every single day with the CPAs we work with who have gone that direction. So please do join our event in December. Click below in the comments to schedule a demo and learn more about how we can support you, your employees, and your client.
No, Frank, thanks for taking the time. Everyone, thanks for listening. Sign up for the webinar in December. Click the link, do the demo, sign up for the partnership. And I think, honestly, easiest way to start is just go out to your existing clients. I'm willing to bet you're going to find, honestly, thousands of dollars of stuff you can just help them with that they need to take care of, and they haven't. This isn't about selling them something that they may never need, or this is what they're supposed to be doing. And I'm willing to bet for most of them, no one's paying attention to it. So with that, again, Frank, thanks for taking the time. Thank you all for listening in to Tax Rep Network, and see you next week.
My pleasure, Eric. Thanks again.